G'day everyone, and welcome to our very first video on finChats, where we'll talk everything interest rates and inflation. So before we jump into the topic for today, I just briefly want to discuss the interrelationship between interest rates and inflation, why they're always talked about hand in hand. So what we've seen recently over the past year is a rapid increase in interest rates. So we've gone from nearly 0% interest rates in both Australia and America to around 3.85, let's say, in Australia, and nearly 5% in America. This is a huge change in interest rates that we haven't seen, frankly, in about 40 years or so. And the one big reason, one big word that you can actually point to is this thing called inflation. So if we take a step back and just say, okay, what do we mean by inflation? What does inflation actually mean, right? It essentially just means that the price of a good or anything that you can probably touch or see, let's just say like a water bottle, a phone, or a car, the price just has been increasing over the last 2 to 3 years. And there are a few reasons why, but we'll talk about that shortly. So essentially, the way that central banks, such as the Federal Reserve or the RBA, is doing to combat inflation is through one main mechanism, and that's through controlling interest rates. And interest rates are essentially the price of borrowing, right? So when you increase interest rates, you actually increase the cost of borrowing and lending. So we think about the consumers, like people like myself and Hoi. Any sort of loan that you might have or debt, when interest rates increase, you'll have to pay more on that. So let's say you have an outstanding credit card and you miss a payment on that, you will have to pay more interest on it. And likewise, if you have an existing mortgage, you have to pay more monthly interest and principal on that mortgage. So that really ties up the amount of money and savings that you have, and you'll spend less, on food and traveling, seeing movies, etc. And so that dampens that demand side of the economy, as economists say, and reducing GDP. And on the business side, likewise, if the cost of borrowing has increased, then businesses can't borrow as much, and so they'll hire less people and invest in less capital to grow the economy. And so I think naturally, I just want to ask Hoi, maybe I want to get your thoughts on, what's actually driving inflation over the last few years recently, because if we actually just look at a time, or in the last maybe 10 or 15 years, inflation actually has been quite stable. And all of a sudden, it's just skyrocketed. I think we'll touch upon Australia's Q1 numbers maybe shortly, but these numbers are incredible. We're sitting at around 7% annualized in March 2023 for Australia.
Yeah.
And anyway, let's discuss that. Let's start with what's driving inflation first. Whether that's either more the goods side or the services side. Just keen to hear your thoughts.
Yeah, well, in general, inflation is driven by, can be the supply side or the demand side, but basically the price of goods and services goes up, right? So in Australia, where we're from, is bonkers, isn't it? 7% annual on an annualized basis.
Right.
And what that's driven by, it's more on the services side. So less on, the international goods. So although you can import inflation, it's less the case for the last quarter. So what I mean by services side is mainly on, if you look at the statements in the news, they mentioned that there's inflation. Some of the key inflation that's gone up is, in the health sector, where, the GP prices have gone up, or the cost of university tertiary education's gone up. So the domestic side of things, specifically the services side. So that's driven the prices up in Australia, at least.
Okay, no, that's really good to hear. And I think we kind of know the driving forces now quite at a high level. And maybe if we could get some sort of idea on, I guess, the implications of inflation and rising prices, I think it kind of makes sense to our viewers. If things cost more, then you can buy less. Is there anything
I
else that that is
Yeah, I think
of an effect to consumers?
Yeah, I think, that to the average person on the street, I think, all these seems, all these, explanation might seem a little bit of a gobbledygook, because what we're interested in is basically, well, how much do we care about the rise in tertiary education fees, etc. Of course, for these people who need to pay those kind of fees, they would need to worry about it. But in general, how much should we worry about inflation, right? So, in my mind, at least, I sort of separate things into whether things are structural or whether it's a seasonal / temporary, price increases. So, we've mentioned increases in medical fees, in tertiary fees. And for me, that historically has always been the case when when these institutions increase their rates, because this is a new year, right? So if a new university calendar starts, they usually increase their price. Their GPs, a new year starts, they'll increase their price. So for me, these type of fees are sort of more seasonal, more temporary. It doesn't ease the pain. It's still painful to have to pay for that, but it's very different to, for example, a structural issue where you have more people coming into Australia, for example, to study, right? So because COVID has, I wouldn't say disappear. I was going to say it, but I wouldn't say it. Because COVID has subsided a little, we've seen an influx of international students again, which is great for the economy. But what that means is that these students will have to have places to live in, right? And if we're talking about hundreds and thousands of more students, these people would need places, and they will obviously compete with others for rents, to buy houses, etc. So that's, for me, more a long-term / structural issue, which will have a lasting impact on inflation. So particularly, from a pure economist point of view, I would more worry about those type of things, because you need to have a long-term solution to that. I'm not playing down whatsoever that, the increase in tertiary education, increase in medical fees is not going to hurt. Of course it hurts, especially for the people who are already doing it tough, right? But there are different solutions to different problems. So, you got to look at which one's short-term, long-term, etc.
Right. So you're looking at what's material, to these inflation numbers. As you said, all of these sort of general price increases is naturally bad, but if you need to prioritize things and sort of think of it systematically, you want to tackle the things that are most sticky, right, or
Right.
prominent.
Yeah.
Typically in your, as you said, in the services sector, with employment driving that tight labor market, driving wages growth and whatnot.
Yeah, I mean, you want to tackle both issues, because it does,
Correct.
impact, Australians everywhere, or inflation in general impacts everyone across the world. But because structural issues take longer to fix, and it's a more of a headache than non-structural. You want to start early, and
Yep.
you're not suddenly going to build new houses overnight, for example. So if you start early, you can sort of minimize the pain earlier. So
Yeah, yeah.
yeah,
I
so
mean, just want to maybe dig into that dynamic a bit further, and the reason why is because for our viewers, central banks actually have a dual mandate. Not all
yeah,
banks.
yeah,
Some banks have single mandates, like the like Canada. But in Australia, we have a dual mandate of achieving price stability, which is consistent inflation between 2 to 3%, and then we have employment stability. And as you said, with this recent intake of migrants, so we're expecting about 400,000 this financial year, and then 300,000 the next financial year. This is double pre-COVID levels. That's
yeah,
naturally drive up a lot of
yeah.
pressure because of due to a lack of supply. And our labor market is extremely tight right now. Our wages growth is extremely high at about 3% annualized. Um, so it is a very tough balancing act in the sense that if you think about it, when you have more people in the country, that will suppress that wage growth and bring it back to more normalized levels, let's say in around 2.5 to low 2% range. But at the same time, while you're decreasing that factor, which is driving inflation, you're driving it elsewhere, which is through those rents. And these are the sort of issues that central banks are tackling across the
That's
world.
that's why they get paid the big bucks. But I just want to add a point there, Hugh, that if we just stick with the example of the tertiary education, the international students, um, they've got limited ability or rights to work in the country, and if they do have, then they'll be impacting the wage growth or not of a particular sector. So generally, you'll see that international students, well, correct me if I'm wrong, I think they have limited rights to work there, and they can work in part time in, say, cafes or etc. So the price inflation or unemployment in those areas might be affected, but where you have, for example, office workers, where those international students can't necessarily work in those areas without a permit or without a visa, then it will leave those sectors untouched. So it just demonstrates that depending on the level of, well, not the level, depending on who's migrating in, will impact different sectors of the economy, and therefore it could be good or bad for you depending on which sector that you're interested in.
I think that's a tricky issue with following markets and developments in the economy in general, because you will see the headlines on the news saying inflation has peaked and it's dropping,
Yeah,
and you immediately think to yourself, well, okay, well that's actually good news, and I won't be affected. But as you said, there is a dispersion across geographies and countries, that everyone is uniquely different in the sense
yeah.
that you work in sectors, you have a different socioeconomic background, you might have a family, you might not. So you really got to dig into like where the effect is being felt, and whether that's going to hit you or not. So, and that's the whole purpose of our channel. It really is to kind of distill all of this a bit more to home. And I think in future episodes, we will, might provide a few examples on like a case study on different sectors being affected and how that might affect Joe in Bankstown or in Coogee. So that might be a topic for future discussions. But I
Definitely.
just want to pivot the conversation actually, just to the RBA statement or minutes, as we call. So typically, the RBA will publish this 1 to 2 weeks after a meeting in the first Tuesday of every month. Now, I want to touch upon it really because we've seen an interesting development. In April last month, saw the RBA pause interest rates after I
Yeah,
think it was 10 or 11 consecutive interest
yeah.
rate rises. A pause, and then on Tuesday last week, as of when we're talking, they increased it. So just want to get your thoughts on
It,
that dynamic and, just kind of flesh it out a bit, because to the average Joe, like that doesn't, like, why not
yeah, it
just
it
in
is a bit
that,
funny, isn't it?
yeah.
It is a bit funny because you know, when I look at what they said in back in April, and then fast forwarded to the May meeting, nothing really has changed all that much. I mean, the stated a reason was, back in April was that, they wanted to pause to see what the impact the previous rate hikes has had.
There is.
But, back then, inflation was still high, as it is now. And just to make it clear, the inflation for the last quarter from January to March, it's 7%. That's 7% on top of the previous increase. It's not, um, so it's not clear why exactly they've paused and then they've hiked. I've always of the opinion that if they've had, if one of their two mandates is to control inflation, for me at least, their decision to pause in April was the curious one, not the decision in May, because at 7% annualized, it's still way above the 3% threshold, and that
Yeah.
3% is the maximum threshold. So I do wonder a little bit about how much of political pressure they're feeling, between April and the May sitting. The review on the governance of the RBA was released, and maybe that had something to do with. I'm sure they will say no. I'm sure they will say no. They will say no, no, no. We'll judge everything on the facts, but but the facts just says nothing really has changed from April to May. So, I mean, do you have any thoughts on why they did it?
Yep.
It did surprise a lot of people, actually.
Including myself. Yeah.
Yeah, yeah,
So, yeah, definitely want to. So my thoughts are, um, they. I think if you think of if you split your brain into thinking about two sort of avenues, there's one where you just follow the news and see whatever the headlines would say,
yeah,
and there's one where you follow actual raw objective data, which is like the RBA minutes and what's actually being published by these institutions. The headlines are saying inflation has peaked. Headline inflation has peaked, which is good. So, to the if you think about people following journalism and the news, that would make sense for a pause, right? Because if headline inflation has peaked and is coming down, there is no need to increase interest rates. So that's the case for the pause from a journalist sort of like media side. But from a raw and data objective side, this is just like my opinions and my thoughts. But if you actually read the RBA minutes, it clearly says that the reason why they paused was to literally buy more time. There's been an influx of economic data that has been just coming from the US and other countries. And really, I think as you mentioned, the RBA needed just to take a break and to say, wait, we actually haven't felt the full effects of all our interest rate rises yet. Maybe there could be a break in the system, some sort of credit or default event. Maybe the collapse of SVB in the first week of March was a catalyst for that, but it was confirmed it wasn't. In the RBA minutes, they clearly said we just needed to buy more time and assess the data incoming. And I find it quite interesting because when I read the minutes or the statement by Governor Lisa Cook from the Fed, uh, a lot of her commentary was very similar to what Philip Lowe said. She said she's a very data-dependent, risk monitoring approach to deciding whether she wanted to vote for interest rate rises or not. And so you can see that there is some sort of coordination along the banks, maybe not on face value, but in the way that they think about increasing rates or not due to all this incoming data. I think that's something that we haven't seen in the past. But and then just going back to why they increased rates in just then, I mean, clearly inflation is at 7% annualized. It's away from that 2% range.
Yeah.
Yes, it has moderated and fell from its peak last year in December at 7.8%. But if you think holistically and very simply, the main objective, that dual mandate, if you go back to the core, that price stability component has not been met. It's just, it's very simple. And central banks like the Fed and RBA will continue to do whatever it takes, quote unquote, to achieve that target.
Yeah.
So yeah, I think with all this talk, about interest rates, inflation, we actually have Australia's federal budget coming up on the 9th of May. So we're actually speaking on the 7th, which is a Sunday. Keen to hear your thoughts, Hoi, on, obviously there is a lot of political sort of pressure from the government to, reduce this inflationary and cost of living pressure on households.
Yeah.
How's this going to affect the budget? What are you sort of expecting to see coming up?
Well, yeah. Well, it's hard to predict, what the budget might hold. But we have a Labor government, which in Australia that means you're for the people instead of businesses, and that's very simplistic. And so what I think we could expect is support to sort of cushion the pain of inflation a little bit. So if we see price increases in groceries and medical bills and rents, etc., then those are the pain points which I believe that the government should address then, right? Because what's the point of addressing something that's not the pain point or the concern for other people? So, these are not just my views. These are sort of some of the analysts in the media as well. So what we expect is, the cost of living budget to be a package around the cost of living. Now, the Treasurer, Chalmers, has already said that there will be a package of some sort to help with that. So I'm not predicting, anything major here. What exactly will be in that budget is anyone's guess. But, as I say, if the pain points are the fuel bills, the energy bills, then, the groceries, etc., then you would expect that there'll be some package there. Now, there's also, remember what I mentioned about, the rent stuff as well, the structural issues with that, with the influx of people coming into the country. So what we could expect from the budget is also a change in the rules on how who can chip in to pay for to buy a home. So at the moment, I think the law is saying any couple, married or de facto, can chip in when you buy a house and get a mortgage. But there are changes, expected changes to happen where, a couple will be broadened to include, family, friends, etc. Basically, anyone who's eligible individuals. So that might help the inflation pain a little, and just in general to get people up the property ladder. So, as you say, Hugh, we're a couple of days away from the announcement. So we'll see what the Treasurer announces on Tuesday.
Yeah, definitely. I think that it will be really, good to see some sort of relief in this
Yeah.
upcoming package. I think that, just talking to family and friends out there, it definitely is biting, and you can see, uh, people slightly cutting down on spending and probably more 7-Eleven coffees or Coles coffees. I know I've been,
Is that what
and
you've been
me,
doing?
exactly. I mean, so I actually was, so I usually get GYG coffee, for
What
the
is that?
apps. So Guzman y Gomez, which is a
Right.
burrito shop,
Right.
and they did coffee for $2, but they raised the price to $2.70, I think, last
Right.
Monday. And then I thought it was a glitch or something, and I'm sure it's probably because of rising costs. But once it happened, I never went back to GYG, and now I go back. I have 7-Eleven coffee,
Which is
which
how
is a flat
much?
$2. So
$2.
yeah,
It makes a difference,
it does. Yeah,
yeah. It's not a theoretical, inflation is not theoretical, right? It really
it
hits
does. Yeah, it
the
it
hip
kind of
pocket.
you can see that in that simple example. I think that's like a 30%, 35% rise. So
Yeah.
uh, definitely cutting back here and there, but it's interesting. We're in crossroads at the moment. I think inflation has the consensus is that inflation has peaked in both the US and Australia, and that there are so many cases to take pauses and potentially cuts in the future. But I think that you would probably warrant those cuts if there is some sort of credit event. If we do see contagion happening around financial markets. I don't know whether that's going to happen. It may or may not happen. The Fed is calling for what we call a shallow recession, which essentially means, oh, yeah, we don't think it will be as bad. And then you've got the other side of that tightrope where that core and services inflation is still very, very sticky. Again, across
Yeah.
across the world with the tight labor markets and extremely low unemployment rates. So that earners on the side on higher rates for longer. And this is affecting everyone, like yourself and myself, but even institutions and the way that investors allocate capital, which we'll talk about in future videos. But I just mentioned that because sort of my background is as an investment analyst at an investment research house, where I do rate manage fund products, and I can see how managers are shifting capital and changing their strategies in a higher rate environment. But we'll stop it for now. Really enjoyed talking with you, boy. Everything interest rates and inflation for a very first video on FinChats. It's been a pleasure. I really enjoyed getting to hear your thoughts and also saying whatever was on my mind as well. But if you enjoyed our video today, do make sure you like and subscribe, comment, leave some feedback. And yeah, make sure you stay tuned for our second video. That'll probably come out in the next few weeks soon. So without further ado, we'll say see you later for
Thanks,
next time.
guys.
Thank you. Cheers. Bye.